Welcome back to Trader UK, Adam here. Today I'll be taking another look at Ilika as they've just released their most recent earnings which covered the full year to April 2021. So I've taken a little bit of time, I've read through the transcript in some detail and then I've pulled out the most interesting points for us to take a look at. Ilika is a UK-based solid-state battery technology company. They have two products. One is their Goliath line, which are the miniature batteries suitable for medical implants and for Internet of Things devices. This technology is here, it's now, it's ready, but in terms of actually generating revenue, it's at a very early stage. The revenue that it does generate comes from selling a small volume off of a small pilot line, and then the rest of it is government grants. So now they're in the process of ramping up this production over the next few years in order to generate significant revenues. Then they have their Goliath line, which are large form batteries suitable for household appliances and of course the application that gets everyone very excited, electric vehicles. These batteries are not ready for mass market yet. In fact, they're a few years off of that, so it's more the R&D stage. Now, because most of their technology is still some way off, I won't spend too much time on the numbers, but the CEO and the finance director do refer to a few key figures throughout the earnings call, which will give us a good idea of just where the company is at. Before we do start, if you could like the video for me, it's greatly appreciated by myself and by the algorithm. And if you do get the chance to go and read this transcript in full, what I really like and what I'm starting to notice more and more about this management team is that when they get asked a direct question, they tend to give a direct answer, which gives me a lot more confidence as an investor, especially when we're talking about a speculative stock. Now, the call opened with Graham Purdy, who is the Ilika CEO, giving an overview of the company, the benefits of the products, and just a general update on where the company is right now. One thing I found interesting in his opening remarks is that he said last year we had a very successful placing in which we raised £15 million. That allowed us to build out our own fab, and in that we will be continuing to fabricate wafers, although on a larger scale. So we'll be able to access 70 times the capacity that we currently have with our pilot line. Now, this is actually a bit of a change in direction because previously when I looked at Ilika, they were looking to outsource the fabrication process to the Americas somewhere rather than actually manufacturing it themselves. Later in the call, they go on to say that with hindsight, they actually wish that they took the fabrication in-house sooner and they didn't waste all that time looking for OEMs in the Americas. He then goes on to say, but we're not going to continue to build fabs. Actually, the plan for the company is that we license the technology into the wider market. And I think this is a good idea for Ilika. A licensing model, of course, isn't always going to be as profitable as a manufacturing model, but Ilika don't have the experience in scaling operations up to, say, gigafactory level. So I think providing the demand is there from third parties, then I actually prefer this option for them. But it is worth noting here that their own production facility isn't quite complete yet, and they won't start selling initial batches until Q2 of 2022, which we're 8 or 9 months away from. So we may actually see a flattening or a declining of revenues until that point. Graham also mentioned that we've entered into nearly 50 non-disclosure agreements with organisations. This is for their Goliath batteries. Now, this is great because we can see that there is interest from IoT and from medtech as well. And although he doesn't give specifics about any commitments, he does say that some of those customers on their own would utilise the full capacity of Ilika's new facility. So again, no firm numbers behind this, but if that is true, it looks like there could be significant demand for the smaller batteries, which are much closer to mass market, remember? When talking about the Goliath line, he's a little more vague about the timescale, but he does say that we think that the initial markets we will address will actually be in the consumer appliances market. Now, although most investors have their eyes firmly on the EV market right now, we shouldn't overlook how big the markets for hair straighteners, for e-cigarettes, for power tools, and for cameras actually are. It was then the turn of Stephen Boydell, the Chief Finance Officer, to run through some of the numbers, which won't give us too much insight because it's still such an early stage company. But he did say the turnover was down from 2.8 million in the previous year to 2.3 million in this year. A few different reasons for this, including COVID restrictions, of course, but to be honest, these numbers don't interest me too much, not at this stage anyway. Just know that the majority of the revenue comes from government grants and not actually from battery sales at this point. In fact, if you go and do a little bit of digging, you'll find that in 2020, only £600,000 of revenue was generated from battery sales. Stephen Boydell says that in 18 months' time from now, we're looking at 12.5 million annually just from their new Stereax facility. So it's a pretty substantial scaling up stage that we're entering into now. During the investor questions, the Chief Finance Officer was asked about raising more equity in future, and if they did, would there be an offer for existing investors to participate? His reply clearly was a yes, saying we have historically always made an open offer available, and we foresee this will be the case in the future as well. I see this as good news myself for existing shareholders like myself. I'm under no illusion that this company is fully funded. It sounds to me like they're good for the next 12 months or so, but I know that there will be more raises in the future, which I'm very comfortable with and happy with. But too often with these raises, it's private investors that get shut out, and it's the institutions that are offered big discounts to invest further. At least this way we can benefit from the discounts and have our say as well. One of the final questions asked to the management team was nice and direct. If all goes to plan, in what year do you expect to receive revenue from EV batteries? And Graham was nice and clear with his response as well, saying we would expect to start generating significant revenue from that facility in 2025. Steve added that they will be looking to sell samples for evaluation throughout the development period. So significant revenue admittedly when you get to mega scale, but we will be selling at a significant premium for the prototypes. That means that if we fast forward 18 months from now, then the Stereax line will start to generate significant revenue, somewhere in the region of 12.5 million annually. Plus, there should be a small amount of income from prototype Goliath batteries and the subsequent grants that they receive from the government. So let's round it up to say £15 million annual revenue in 18 months' time. Remember that 15 million figure because we'll circle back to that in a minute. So what do I see for Ilika moving forward, and is now the right time to invest? Well, the share price, currently it sits pretty comfortably around the £2 mark, but it has dipped recently to £1.30, so it's been pretty turbulent to say the least. The market cap is around 270 million at the moment. Now, as a rule of thumb, this stock likes to sit around 100 times revenue. It has ranged anywhere between 75 and 135 times annual revenue over the past 6 months, but I only look to enter when we get down below 100 times revenue. And for that to be the case, based on the current numbers, I need to see this below £1.80 a share before I start adding again. So what I'll be keeping an eye on is inflation, or rather the fear of inflation that we have at the moment. I'm not actually a big believer that inflation is here to stay. I think it's the wrong decade for sustained inflation. But as other people worry about inflation in the short term, these high multiple stocks get hit very hard. So as we see those ups and downs like we will over the next 6 months, in line with this period of inflation fear that we're going through, I will look for entry points below a multiple of 100, like I said, which again is somewhere around the £1.80 mark. My final thoughts on Ilika are that they won't necessarily win the race to be the first mover in solid state battery technology, but they will be somewhere in amongst the front runners. And in the end, it probably won't matter whether you got in at £1.50 or £2. I think there's far too much upside on this one. In 18 months' time, we're expecting revenue at the low end of expectations to be around £15 million. And if we use the low end of the revenue multiple that we've seen over the last 6 months and multiply by 75, then we're looking at a £1.1 billion company. Having said that, I think that before we actually get to that point, there will be plenty more price swings like we've seen recently, and that will continue over the next 6 months or so as investors weigh up the high multiples and the impact of inflation. So those that like to actually time the market, I think there will be plenty more opportunities to do so. My approach is actually to keep nibbling, keep adding when we see these pullbacks, and participate in any future equity raises that the company undertakes, with the goal of making this one of my top 5 largest holdings over the next 18-month period. As always, please let me know down in the comments what you think of Ilika. Will they deliver the goods? Will they deliver on their potential? Or has too much already been priced in? Thank you as always for watching, and I'll see you next time.